is Run. Some people know me as Crypto Man Run. I host the world's first televised cryptocurrency show on CNBC Africa. I think today we are the biggest crypto show in the world, having the time of my life. And I've been asked to moderate a panel which I think is very oddly worded. It's called Security Token, Ownership Evolved, and the Future of Digitized Assets. And to me, I think it's the future of assets. I don't think they're going to be digitized. Everything's going to be digitized. So on my panel today, we've got Carlos, Allison, Rob, and Prier. If you guys could just introduce yourself, but really quickly. Like, I don't want to know your life story, and I don't want to know what you did at high school. I just want to know what you're doing today.
So I went to high school in Barcelona.
I'll ask for that.
I'm the co-founder and CEO of Securitize.
Hi, I'm the co-chairman of the financial services group of Katten, Muchin, a law firm here in New York.
So she's the legal person.
My team put it here, so I don't say anything stupid without the lawyers being present.
We've been working on that all day.
I run a tokenized venture fund based out here in New York called CityBlock Capital.
And Prier CTO of Coinmint.
Can you give us a bit of insight as to what your business does?
Coinmint, we are a cryptocurrency data center. I'm from the commercial data center space originally. We've been running cryptocurrency data centers for about 2 years. And we do Bitcoin mining, Dash, Ethereum, but primarily Bitcoin mining.
And how do securities token fit into your business model?
So we recently acquired what we believe is the largest digital currency data center in the world. It was a former Alcoa aluminum smelter. It's 435 megawatts, and that facility has a capability of around 250,000 machines. So thus far, we've been financing our business pretty much kind of exclusively internally, kind of an extended friends and family network. And obviously for this scale, we needed to go beyond that. And so given the cryptocurrency space, ICOs and tokens, it was kind of a natural play for us.
So you issued a securities token?
We're in the process. We're working on it.
Okay. Can you give us the relevance of a securities token to your business? Sorry? The relevance of securities tokens to your business.
Sure. So I've run a venture fund here in the city for about 4 years. I was getting ready to launch another venture fund, and what I discovered as I was talking to investors is that the average venture fund is twice as long as the average American marriage. And they said, listen, I like you, but I don't want to be married to you. And so what we've done is we're building a venture fund using blockchain technology to provide liquidity to investors so that they're not locked up for 8 to 10 years. They can buy and sell those interests as they wish.
And where are you in your process? How far along the process are you?
So we announced today that we're launching our fund, and we're just getting started.
Allison, the relevance of securities token to your business model.
Well, I think working with people that understand what a security is and what defining something as a security token is as it relates to bringing a legitimate offering into the space is critical to my business. Not to say that utility tokens don't have a place in this world, or cryptocurrencies for that matter, but I think very few people, especially in the nascent stages of this industry, appreciated what a security, as the SEC defines it, is as it relates to these undertakings and these businesses and these ventures. So people like Rob, people like Pierre, who understand that we're looking at assets that are going to appreciation value, understand application of current laws and the Howey test to those undertakings, it makes my job much easier.
Carlos, over to you. The relevance of securities tokens to your business.
So we basically want to, be the leading platform for, the primary issuance of security token and help people, like Coinmint or like NYC to be able to issue security tokens in a compliant way with the support of our lawyers, and make sure they can successfully raise money and successfully run their business without having to worry about all the intricacies of the blockchain technology and tokens and smart contracts and things like that.
So I think a good place to kick off is where you left off, and that is, what is the process that you're helping these people with? What are you actually doing?
Okay, so in our case, we're a white label software platform. So if someone like, let's say, Rob wants to issue a security token, he would come to us. Someone, either he knows what he wants to do, which was the case of his project. In some other cases, they don't have a clear idea what they want to do, so we will refer them to some advisors that can help them structure the token structure, the white paper and things like that. And then they have to work with lawyers, let's say like Katten or someone else, to get all the legal documentation in place, the information memorandum or private placement, the subscription agreements, etc. And from our side, we will set up an instance of our platform dedicated to them, where they can have like two sides. One side is what an investor sees, where is all the process of you as an investor onboarding there, submitting documents, reading documents, signing subscription agreements, sending crypto, etc. And the other side, which is the side that the issuer, in this case, let's say Rob, sees, which helps him manage the entire process, know if Ran wants to invest and has sent money, but it hasn't signed the subscription agreement, or you have not set up your wallet, or things like that, and manage all this process from our platform.
Okay, so I think we all in this room are probably bullish on the fact that securities tokens are the next big wave. But what I want to focus on is the hurdles that we have to cross to actually get there. Because I think there's been a lot of hype around this term called the security token. We heard about it. We heard a lot of hype towards the end of 2017. I want to talk about the practicalities, and I'm going to start off with raising capital for securities tokens. So today, when you go into the market and you talk to investors, and you say, I'm raising capital, and the instrument that you're buying is not debt, it's not the traditional equity that you're used to, it's not a utility token that you've heard about, but it's a new asset class called the security token. What are the barriers?
First of all, let me just qualify that I come from the technology side. I'm not a finance guy. But inevitably, basically, I'm involved in talking to potential investors. And I think basically, if you're talking to someone who's kind of outside of this space, the biggest barrier, obviously, is basically educating them and informing them of the value proposition in a tokenization versus kind of a traditional instrument like a paper contract.
But the proposition is a very exciting proposition. It's more liquidity, worldwide liquidity, less fees. That kind of sounds simple. If you were standing in front of an investor, it kind of sounds logical that every investor would invest. But what are the hurdles?
I would say get him to understand that.
Yeah, I would say that depending on who you're talking to, right, who your investor base is, if you're talking to a traditional institutional investor, in my case, when you're thinking about venture capital, they're going to say, all right, what do I do with this token when I receive it, right? So in the case of a venture fund, it's a direct economic interest in the venture fund, just like an LP interest would be. And so I think what they would say is, well, how do I custody these tokens? And certainly that's an issue as an industry we're working on, which is custody of these assets. For crypto investors, it's an opportunity for them to diversify their portfolio out of crypto holdings. So it's a way that you can send Ethereum, send Bitcoin, receive a token in return that represents maybe investment into traditional startups, maybe into blockchain-based startups. And so I think the barrier depends on really who you're talking to and who your audience is.
So specifically in your business, you've raised a VC fund. Who's your typical investor?
So I think it's a mix of the two, right? Right now, it's really family offices that we've seen a lot of interest from. And the other big investor is people that have made substantial amounts of money in cryptocurrency that say, listen, I don't really want to go to fiat, but I really like the ability to send you Ethereum, send you Bitcoin, receive a token in return, and I have access to the larger blockchain venture ecosystem through your fund and through your investors.
Allison, over to you.
Well, I think the education is the part with the investors that's the most interesting, and where I find the most challenges is with the true retail base. And we all have like a spiel or an elevator pitch we give, and so the one I gave to my Aunt Florrie, because I feel like if she gets it, everyone will get it, is like, one day we had something called a share, right? Like one day someone described a security as a share, and everyone had paper. And then a few days later, they kept losing the paper, and they said, well, now they're uncertificated shares. All right, we'll call them uncertificated, fine. And what I explained to Anne Florrie is the token is just the evolution of that evidence of a right to profits of a company, and somehow that resonated with her. So helping the people understand that it's not some amorphous thing, and in fact, it's not even a coin, right? There's no coin, right? What you own is a right and a piece of the same economic rights. It's just evidence in a very different way. Then I think the other interesting aspects to bringing a security token to market are just some of the legal hurdles that have to be thought through and jumped over as you bring the coin to market. So most people are relying on what's called 506C under the 33 Act, which allows you to advertise.
I love it when lawyers talk in codes.
Well, in this case, it's the SEC, right? So there was a ban on general solicitation and advertising for years. And then under Dodd-Frank, they mandated that the SEC remove that. So what did they do? They didn't just delete the line that said, you can't do this. No, they wrote like 700 pages about how you could do it. And in those 700 pages, it doesn't just say you can advertise. There's very specific requirements as to how you determine the accreditation of investors who purchase as a result of those advertising. So again, just working with the right partners like Securitize to make sure that the investors meet those standards is critical, and I think something that I don't think a lot of issuers are really giving deference to.
Carlos, we're focusing a lot on the investors meeting standards. What about the token and the token infrastructure meeting investor standards?
So I think there's kind of like three issues in this aspect of the hardest fundraise, and I'll get to the token standards as well. So the first one is the lack of knowledge. So I've seen someone that has fundraising for a security token last year versus I see some of my projects this year. This definitely has changed. So first, crypto is much better known now than, let's say, May, June, July last year, which helps. Second, security tokens are now much better known than what were last year, which helps. But still, it needs more education for people to understand, as Allison said, that this is just an evolution of digitizing the traditional shares. And it's nothing to do with Bitcoin, and it's nothing to do with the real crypto market in terms of kind of volatility or issues. Okay, the second thing is what Rob said, which is custodians. Okay, that's a major issue because, if you work for a corporation or for a family office, and I tell you you have to hold this token, but by the way, if you lose the private keys, you lose the token. You don't want to do that, or you don't want to hold that responsibility. Someone has to do it for you.
If you send it to the wrong address, it's gone forever. It gets burned.
Exactly.
You've got no one to call.
Well, to be honest with you, now what we're getting better with the smart contracts, and this goes back to your question about what is in the token design. Now we have smart contracts that are more capable of being able to, if a token is lost, we can burn them remotely, and we can issue a new one, and we can do certain things that help mitigate these problems, but this is still a problem. And the third one is that the whole promise of digitizing security comes down to three things. One is capital formation, more efficient, more inclusive, more worldwide done. The second one is automation of all the entire process of managing how funds get dispersed or how you manage the cap table and things like that. And the third one, which is the one that is still missing, is the liquidity. Because the security token exchanges haven't launched. So we have two companies here, Open Finance and BRBX, that are doing security tokens, which is great. There's many others trying to do it, but the reality is none of them has actually launched yet. I think when those guys launch and there's real liquidity, which I hope it will be, this will actually stimulate the market big time.
So what are we expecting in terms of liquidity in 2018? Or are we expecting any type of liquidity in 2018? We know T0 has been speaking about a launch. We believe OpenBook is launching. Orderbook is...
Open Finance is launching soon.
Orderbook is launched or has launched. Are we expecting real liquidity in 2018, or are we jumping the gun?
I think that in 2018, what we will see is the launch of at least 5 regulated security token exchanges. I don't think they'll have a huge liquidity, and I don't think also there will be too many tokens being traded there. First, because there's not too many security tokens, and also because some of them have been issued in the US under a Reg D, and therefore have 1-year lockup, so they will not be able to trade for US customers. I think 2018 will be the year of security tokens exploding, but 2019 will be the year of the liquidity for security tokens to explode.
Now, there are various companies doing securities tokens. Is anyone aware of a big US or big listed company that is talking about changing from regular equity to a securities token?
Well, there's at least one firm that we've worked with that has an existing offering that migrated to a token offering, a corporation. So
what is Anthony? Pom was going to do that. I mean, I think we will talk about this later, but his father company was going to basically migrate, do an IPO, and decided to do an STO. So, of course, it's not a huge publicly traded company, but it's a first. So.
And I think to go back to your question about liquidity, I think it depends on how you define liquidity. If you're looking at something like venture capital, the idea is not that you can buy and sell tokens every day in and out of asset classes, right? The idea is that over a period of 8 to 10 years, you may sell 4 years in or 5 years in. So I think when we start to think about it, we shouldn't think of liquidity as like, can I sell this today and tomorrow and keep reselling? It's, this is not the product, it's a feature of what we're doing.
I think it's a good point. So liquidity is not black and white, right? It's a continuum. So you're going from no liquidity versus, let's say, a publicly traded company that has a huge market cap and liquidity versus somewhere in between, which I think is what security tokens will bring.
So we've been accused of inviting everyone to our party, but not being ready to accept everyone to the party. And one of the big things that we've spoken about is custodianship. The other one is, of course, liquidity. Are there any other barriers for a company that wants to enter?
I think the biggest barrier at this point is the service providers in the industry, right? So if we look at who can help you with the security token offering today and execute today, and it's one company and it's Securitize. And so there are only so many people, and there's a lot of people that want to do it. So there's a lot of people working on platforms, not to trade tokens, not ready yet. A lot of people working on the ability to launch tokens like Securitize has, but there's only one doing it. The legal hasn't, in my experience, been totally flushed out. I mean, there's lots of back and forth between attorneys trying to figure out how to execute this and who's done it before, and it's very nascent. And so I think that as we look at this and as we think about it, there's still a lot of issues to be flushed out, and a lot of people that have to work together to get it done.
So
that's a good thing. That the problem is we don't have competition. So
I don't think even if you did have competition today, you could consider them competition, because the playing field is so big, you probably wouldn't even meet them.
So what people don't understand is that last year in the US, there were more than 40,000 issuers of private securities, so unregistered private placements, 40,000. Okay, in our business plan, we don't even have like a fraction of that, for the next 3 years. So I think I agree with Rob, even though I don't like to have competition, but I think the market is so big that you need to bring a lot more players. And it's just not the issuance platform, but on the exchanges side, on the legal side, more people have experience to do it, on the custodian, on the advisory, etc.
Now, a few of you mentioned cryptocurrency investors pulling money out of cryptocurrency into securities tokens. Should we classify securities tokens as part of the broader cryptocurrency, crypto asset market? Or is it a completely different thing? Should we talk about cryptocurrencies as one bucket, crypto utility tokens as another bucket, and crypto securities tokens as a third bucket?
I think we should, but I don't think the world will, but I think we should. They're very different things. I mean, they're defined as different things by the regulators, and globally, the regulators are starting to recognize them very differently as such. I mean, I think Malta just came out with rules that very clearly define which are securities, which are currencies. Similarly, in Bermuda, I think Canada, like who knew this was happening in Canada, did the same thing. So I think the regulators are catching up to this.
So, Rob, would you be upset if you weren't included on CoinMarketCap as part of the market cap of crypto assets?
Not at all.
Actually, they include blockchain capital, which is security.
Yeah,
they include BCAP, Blockchain Capital's venture capital fund. But in my mind, it's a misfit.
It is. I mean, I think if you look at blockchain as an ecosystem, it's kind of a three-legged stool. So the first of that is payment tokens, so Bitcoin. The second would be utility tokens, so Filecoin, EOS, and then the last would be security tokens. And I think that we have to look at those very differently and as different market segments.
I think the other difference is that if you think about a utility token, a legitimate one, not some of the shitty ones that people are using, then they only have a reason to exist if you have a decentralized application or protocol where the token actually is what makes it work and is the economic incentive for people to participate in a decentralized application or protocol. That's great, but that by definition is a very limiting application, right? Security tokens is not about making utility tokens legal. It's about digitizing securities, which is a completely different story, right? So it's a much bigger market, much broader application. So as such, then it needs to be categorized as something else.
So when you talk about securitizing assets, you are in the line of fire. Can you talk about real-world assets that are, you don't have to mention names, but let's talk about practically the type of real-world assets that you guys are dealing with today that are actually open to being securitized?
We have customers or prospects, some of them, that are doing things like, plane leases, special station, seriously. Buildings, obviously, real estate, that's the obvious one, art. So it's not even just companies. So it's physical assets that, have a lot of issues with liquidity, and that the kind of the fractional ownership that security tokens bring allow them to be liquid, right? Because if you want to buy a Picasso and it's $100 million, you need to find someone that has $100 million and that likes Picasso. But if you use your security token for $1, you only need to have, a few thousand people that want to spend a few $1,000s on having a fraction of a Picasso, which is a much easier problem, right?
And that should create a premium on the price of the Picasso because it makes it much more liquid. And that's one of the big advantages of securities tokens, the fact that you create a premium because of the extra liquidity and because you now open cross borders. What kind of premiums do you think we're going to see from this new world? So if I take a hotel that today is valued at $400 million as per the news articles, and I tokenize it, is that going to increase the value of the hotel, and by how much?
Yeah, I think if you look at the hotel, I think the first question you have to ask is it priced correctly to begin with, right? So is it a market price? I think people talk 20 to 30% liquidity premium that can exist in these assets. Could it be more? Possibly, depending on where it's priced. In my case, I really see the ability to help early stage companies, whether they're blockchain-based companies or traditional companies, unlock that liquidity value that really depresses their price.
I think, as I said, liquidity is not black and white. It's a continuum, right? So it depends on how illiquid you are. The premium, it's much higher. So real estate is typically estimated at 30%. And keep in mind, real estate is a $150 trillion market. So if you unleash 30% of value in a $150 trillion market, that's a lot of money right there. But there's things like art, which is a lot less liquid than real estate. So probably the premium on art is much bigger. There's things like startups, which are highly liquid, which probably the premium is higher. So it depends on the actual liquidity of the underlying asset. But I would say 20-30% is the minimum.
Yeah, as far as premium goes, I can only speak to our offering. And our offering, it's fairly simple. Basically, when we're talking about tokenizing a physical asset, that's exactly pretty much what we're doing. So basically, every one of our tokens equals a terahash of mining power. So just to give an example, I don't know if any of you guys saw there's a machine in the other room. That machine is 17 terahash. So basically, that machine would represent 17 tokens. So basically, our model, we're trying to keep it simple. And that's exactly what we're doing, is we are tokenizing a physical asset. I think one of the distinction, kind of what we're doing, is actually, given the value proposition of mining is a daily payout. So we actually, the tokens, allow us to a very easy and simple way to provide these daily payouts to the token holder. As far as the premium, given we're still in the process of launching it, what type of premium it actually offers, it's still a big unknown for us, but logically speaking, according to what these guys say, there should be some premium.
When you say one security equals 1 terahash, is that equity in a terahash, or is that a financial instrument that gives you the right to X% of revenue?
It's the financial instrument, basically, that represents a terahash. It's not equity. It's basically, you can think of, if you have 17 tokens, you have the right to that machine, or 17 terahash, basically, for a lifetime term.
So when you get the payment from that machine, what is that payment deemed as from a regulatory point of view? Is that a dividend, which has lower tax, or is that income tax event?
Well, let me just qualify. I'm not a tax guy. I'm a tech guy. But it's been from the U.S. IRS perspective, according to what I've read. Basically, mining payments are treated as ordinary income.
So they accrue ordinary income tax, which is much higher than dividend tax.
Yes, and again, look, I'm a tech guy. I'm not a tax guy. I'll let someone else answer that question better than I can.
But in terms of the impediments that we've discussed, I think a lot of people have these very preconceived notions of how their offering should be constructed, and they go pretty far in the process without talking to the auditors, the accountants, to account for these very issues. So, the issues that we've worked with Securitize and otherwise, we've been very careful to help them take a step back and help them figure out what it is they're offering and how to do so in the most tax-efficient way. And it's always the work up front that will solve those problems. So these are not, impediments. Again, it's just thinking ahead and working with the service providers to see what can be done. I mean, there's been very few instances where we've said, to Securitize, for example, can you guys code for this? And the answer's invariably been yes.
So let's talk about the future type of instruments that we may see. I mean, up until today, we've seen an instrument called equity, which allows you a percentage of the bottom line of the company. We've seen debt, which allows you to go one level up. We're now creating new instruments which can give you cash flow based on a daily payout. What other instruments are we likely to see as a result of the smart contract technology?
I think, there's so many cool things you can do, right? Because many of the complex financial instruments have a problem when you want to distribute money and calculate how much money you need to give to everyone. Like we were with a company this morning, I cannot tell the name, but basically they were telling us about how one of the problems they have is that they issue these complex securities, and then they have some of the investors that buy these securities that have had lawsuits because they have losses because they don't receive all the money they need to receive. And I was just like saying, this is ridiculous, right? Because if you put this on the blockchain, it's an algorithm that determines how payouts happen to the different classes of token holders, let's say, which pose their problem. And then as far as the algorithm is properly coded, the room for error is zero. So you will actually never made a mistake, right? So all these problems in the financial system that doesn't allow them to deal with complex types of securities because of all the manual errors will disappear. So you probably see very creative ways of creating securities. You will see, now in our portfolio we have 3 funds that have issued a token. Why not create another token that is a basket of those 3 tokens, and then we've created a fund of funds out of nowhere without having to have a fund admin, and so the possibilities are endless.
So it gives us flexibility to create a whole lot of financial instruments that we previously didn't have.
Correct, as complex as you want.
And I think to what Carlos's point, we're issuing 3 different tokens this year that represent venture capital in 3 different cities across the US. And then we're taking a portion of those and creating a single security out of them. And so what's neat is it kind of represents a vintage of venture capital across the US and an early cross-section of early stage technology.
So I'm going to open the floor up to I'm going to open the panel up to questions from the floor. If you guys have got any questions that you want to ask, if there's a roving microphone, if we can just get it over here, please. Yep.
Thanks. I'm curious about what the legal link is between private company stock and tokens. I understand Delaware has passed SB 69 law that says that stock can be represented on a distributed ledger. Is that the go-to legal mechanism to associate stock with, or rather associate token ownership with stock ownership?
I mean, it's definitely the easiest one to conceive of, and I think it's the easiest one to explain to investors, and it's certainly easiest from a harmonization standpoint when you're looking at the cap table, if you're all treating it the same way. But it's certainly by no means the only method. I mean, a step back from that, to some degree, is the SAFT, right? It's sort of like the step before, in my view, the equity. And that's a real offering, right? And it's like a right to the token if and when offered, but that offering is itself a security, right? So where does that fit in? So to answer your question, yes, probably the simplest, but by no means exclusive. And I think as the industry matures, we're going to see more and more ways to evidence different rights for companies, whether it's by share or otherwise.
Just in our fund, in Spice VC, basically we sign a subscription agreement that guarantees you that the legal rights of the token are protected by a legal document that the lawyers wrote.
I think maybe a couple of you could opine on this one. What's the setup cost look like right now from a traditional fund structure versus doing something through Securitize or Securitize?
Very cheap.
I mean, just percentage-wise, maybe if it's $100,000 to do it the traditional way, is it $50,000 to do it through Securitize? What's any?
I think there's 2 aspects of it. One, today I will say that probably the legal cost is a little bit higher because it's newer and there's less people that know how to do it, and the lawyers tend to spend more time because it's new to them as well. Than it should be. I think this is going to come down over time as lawyers get familiar with how to write things around tokens and information memorandums about security tokens and things like that. From let's say platform perspective, obviously that cost doesn't exist on a traditional fund because you issue paper securities, right? So and therefore you don't need a platform to manage that. So that cost actually makes it more expensive, but it makes it liquid. So if you think the premium of liquidity is 20-30%, there's not even a fraction of that you're spending on the platform. So you can't compare just one cost to another cost, but you have to compare one cost versus the benefit.
Yeah,
that
I don't
brings.
think they're exactly apples to apples in that the security token offering has the potential to unleash such mass amounts of capital and such wide distribution that just you would only see if you did a public offering right now in the current construct. So quite frankly, I think the better example is what's the cost of a public offering versus a security token offering.
Comparing with an IPO will be the right thing to do.
But Carlos, maybe you can give us an idea of the type of costs that are involved in a securities token issue for those that are not aware and are considering a securities issue. What kind of costs are involved? So we know we've got legal costs. Let's isolate the legal costs and let's talk about the remainder of the costs?
So there's three types of cost. One is the legal cost. The other one is let's say the issuance platform cost. There's four types actually. The third one will be whatever marketing / brokerage fees you want to use or pay to help you with the capital formation. And the fourth one are the listing fees for the exchanges. So those are kind of like the four costs. But the right, as Allison said, you have to compare this with an IPO because basically you're becoming publicly traded and becoming liquid. So you can't just compare with a completely private placement that might not have any of those costs.
So if we could compare it, I will get you in a second. If we could compare it, we could say legal costs slightly higher. Marketing costs probably the same. I mean, marketing...
Even the legal costs being slightly higher isn't the same because the legal costs to do an IPO are significantly higher than to do a private offering. So again, I think you're coming out lower there too.
Okay. Marketing costs, the same.
About the same, yeah.
I think the marketing costs I think they're higher just because as a company today, as a traditional venture fund, for example, you're not going out and creating a community. And for the first time with this type of offering, we have to create community. And so bringing in the personnel and the vendors that can help you build a community around your offering, I think that's higher. But I think at the end of the day, you have to consider the access you're getting to the public markets.
Okay, so that's high. And the exchange listing fees, we can assume that the exchanges are going to be quite light on listing fees until they get into critical mass.
They are very light as far as the ones that we have visibility. It's not the craziness you have with utility tokens. I guess maybe 2 years down the road you will get to that point, but not today.
I've heard the reports of Binance charging $5 million for a listing.
Yeah, it's not like that in security tokens because obviously the demand is not there. But again, you need to compare with the listing fees on NASDAQ or New York Stock Exchange or things like that. So I think that where the biggest difference is that the cost of being publicly traded on a yearly basis is huge, and that cost kind of like completely disappears. So you can't just compare the issuance or the capital formation. You have to look at the next 5 years, how much money I'm going to be spending by being publicly traded in NASDAQ versus by being publicly traded in open finance. And
so
it's going to be a fraction.
Define that for me. Why are the NASDAQ listing costs so high? What is it, a NASDAQ fee that they charge you? Is it the additional resources that you have to hire to comply with the NASDAQ requirements? Okay. What is it that makes it so expensive?
The second one.
The second one. And with these securities exchanges, with the T0s and whoever else is going to come into the game, are they not going to require the same level of governance?
Well, just technically speaking, there's a much lighter compliance regime associated with an ATS versus a full exchange. I don't know why. They do almost the same thing, but it's just a lighter compliance regime.
Okay, there's a burning question over there, so let's get to it.
Actually, the question is exactly about, as we build, you do ICOs, there's different levels. So the first is the platform which Securitize has solved, and the only one actually who has solved that solution, brought that solution. The second is legal, which is still under debate.
No, we solved that.
That's solved.
Solved it.
Okay, all right. I could maybe disagree. Anyways, won't go into that. The third is marketing, which is the fourth is listing, and the fifth is liquidity. And right now, the marketing is a big challenge. So we're doing an ICO with Securitize, and the platform and the legal are solved. And the question is today when we sell, or we're doing this ICO, which we're launching very shortly, is about selling the same, very similar to ways that where we are selling venture funds.
So I'm going to give you 30 seconds to pitch your ICO so we know what you're talking about.
No, we're not pitching the ICO. The question is, in utilities, you go to a global market and people just buy your utility. In securities, when we're talking about broker-dealer and we're talking about why it costs so much to have Goldman Sachs as an underwriter, which brings the whole solution together, a great part of it is book building and being able to sell the securities. So the question to all of you is, do you believe a new player will come into market that will be the Goldman Sachs or will be the book builder to securities tokens?
My gut is that you will find a whole new place for placement agents in this space that have offerings designed under 506C that are paired with suitability and AI check and AML people to help bring these tokens to market. I think there's probably a few now, but I think probably there'll be a lot more soon. And I think the whole package of what an underwriter does as it relates to the type of offerings we're going to do is going to be phased out.
I think that the other thing is you're going to see that changes is that if you look at private placements in the US last year, there were around 40,000 plus, and then more than 300,000 investors participated, out of which only 10% are retail. So you're talking about 280,000 or something accredited investors. The total number of accredited investors in the US is close to like 10 million or something like that. So it means that there is a huge pool of people that could actually be buying on this new asset class that they probably have no idea that most of the deals actually exist because they're all done privately. So by being able, Allison mentioned that with the Jobs Act, you can actually now do general solicitation. And with people now more engaged on the internet and with security tokens becoming liquid, etc., there are new ways for you to promote your projects to reach out to this huge pool of millions of investors that are accredited that they don't invest in any private deal.
So Carlos, I want to ask you a question, and it's specifically to you because I think it's your field of expertise and the field in which you're playing. Is there any possibility that the whole world won't move into some kind of blockchain type asset? I see almost no other solution but a blockchain type asset. The question is, how simple is it for the banks to start doing what you're doing tomorrow?
That's a very good question. So I think they could actually do it. But someone else has worked on a large corporation in the past. I know the difficulties of moving as fast as a startup. So I think that is more likely that a bank that wants to get into this space will actually buy a startup than try to do it themselves. But I can tell you, I was like this morning with Banco Santander. The appetite of banks to get into this space is very high on the security token side. Why? Because they see it as their natural place to play. And because their traditional business of IPOs and things like that is shrinking, because no one is doing an IPO anymore because it's a very expensive and onerous process. And they see this as like a new way of revitalizing their dying underwriting business. So I think definitely it'll come here. In terms of a bank being able to build technology as fast as we can build it, no way it's going to happen.
Compliance will never allow them.
It's not just compliance. It's like the decision-making process, the budget allocation, finding the right people. I work at Telefonica, so I can tell you this is very painful. So,
any further questions?
I would say also, just quite frankly, this is going to put so many other businesses out of business that I think the banks are probably scared of it.
But they are going to be the ones that go out of business first if they don't.
I can't say that, but again, in like Grain and Flyer, title insurance, that will go away. And I think you think more and more about it, how many things are going to go away from this, and I think banks are probably...
Central depository is going to go away. Clearing houses, they're going to go away. Why would you need that if the shares are on the blockchain?
You're going to get a new type of company which learns to deal with smart contracts and getting people out of bad situations in smart contracts.
Correct, but you don't need a central depository, right? Because the central depository exists to guarantee that all the shares are in one place when trades happen. The blockchain is the central depository.
So I'm tokenizing a real estate fund, so I was very interested about the premium discussion earlier. And actually, as you know, there is some liquid real estate. It's called REITs, right? And there's no, it quite often trades at a discount or at a premium, but it could trade at a discount, basically. And I was wondering, how do you guys, what's your opinion on the misprice that could happen between the value of the security token and the value of the underlying assets, right? Any token could trade at 20-30% discount, like a REIT, and also you don't want your security token to become a bubble, trade at 2 or 3 times the value of the underlying assets, and how is it possible to enforce a link between the market cap of the token and the actual value of the, let's say, the buildings, or how is it possible to mitigate the discount as well?
I think when you think about discounts and premiums to assets trading relative to NAV, specifically speaking about REITs, the thing to remember is that as diversified as it may seem, they're really not that diversified. So the opportunity with security tokens specifically in that is instead of owning 100 buildings, you can own a small piece of 100,000 buildings, right? Which does produces a great risk-adjusted return. So I think you have to think about it that way. Certainly these things will trade at a premium or a discount to NAV, right? To me, what's important is to make sure that NAV is priced properly and we know what the underlying assets are worth. And if people are speculating on those, to me, it's no different than any speculation on the market that occurs in any other asset class.
I think that you can't actually guarantee that so an asset will trade at the fair value, right? That doesn't happen anywhere because the trading value is based on demand and supply, which might have a rational component and an irrational component. And also people are looking at not the fair asset value today, but the future asset value, which is what actually reflects the value of, let's say, a share or a security token in the future. So I think that might be the discrepancy. And I think the other thing in terms of the discount, I'm 100% convinced that liquidity increases the value of things. Or let me put it the other way around. Liquidity allows you to sell at a fair price without having to discount. Because if I cannot find a buyer for $100, my only way to try to sell an asset is by lowering the price until I find someone that wants to buy it. But if it's $100, I only need to have 100 buyers that have $1, that suddenly unleashes liquidity, and I can probably sell at $100 without having to discount the price. So.
We have time for one more. So let's do one more question. You've had one, so I mean, yeah. You can go.
You're banned.
So I still see kind of a split between the world of crypto and fiat. How do you see that kind of bridge closing where the demand for everyone who has like an E-Trade account can then buy a securitized token?
I mean, this is more of an optimistic statement than I'd usually make, but I would think within 10 years there will be a lot of harmonization between these markets. I think Carlos alluded to this, like, even within the securitized platform, they're forward thinking in terms of making sure all the protocols can integrate from issuance to security token, and I have a feeling that wherever we hold or trade fiat will soon be able to be integrated with that. That's just sort of where I see it going.
Yeah, and I would say the other thing is there certainly will be a derivatives market where you can invest in this by proxy through an E-Trade account, right? Before you can probably directly buy tokens, but I mean, I would agree that it's coming sooner than later.
Also, another interesting thing is the concept of tokenized fiat, which some banks are working in, and they're even thinking about assigning IBAN numbers to wallets, so you can basically move from crypto to fiat in a seamless way, which is going to help security tokens, especially the ones that issue kind of like dividends or payouts in a frequent manner, and you want to do it on a stable way rather than use, let's say, Ether or something like that. So I think that these two worlds will come together much faster than people think.
Great. So I think that's all we have time for here today. I think that the next event is a fireside chat with Anthony Pompliano, who's extremely bullish on securities tokens. He says the virus is spreading. He says it's taking over the world. So that is one that you should probably attend. Thank you very much, guys.
Thank you.
Thank you.
Thank you.